This is the Financial Survival Network. Now more than ever. The Financial Survival Network.
And welcome. You are listening to and watching the Financial Survival Network. I'm Kerry Lutz. Well, is there a resource or commodity supercycle? Is it now taking place? The evidence comes in daily that the answer to that question is yes. And even when you have a commodity supercycle, some of them do better than others. And one which, for political, economic, and production reasons, is really looking good right now is copper. We're looking at copper prices over $4 a pound. We could conceivably approach all-time record highs. Wouldn't be surprised if we did. And therefore, I thought it was a great time to reconnect with our sponsor, Doré Copper. You find them at Doré Copper, D-O-R-E, copper.com, and the CEO, Ernie Mast. And Ernie, it's great to have you back. $4 copper. Hey, do you remember last March what the price of copper was?
Yeah, we were really happy to have the price of copper breach the 350 level. And that kind of price level we hadn't seen for a few years. So the run up to $4 was quite quick and quite unexpected. But what's very interesting is the fact that the price has held over $4 over the past month or so.
Yeah, so it looks like we have support at $4 a pound, which is very significant. Last time we got $4 copper was back in 2011, and we know what happened then. So you've been talking about the coming supply deficit. And when we look at the presentations on Doré's site, the deficit is looming, and it's kind of starting this year. And all the government policies, as well as societal trends, everything is towards electrification. Do you think that maybe your projections of this looming deficit are on the conservative side?
It is possible. However, as we noted, the research that we looked at by Wood Mackenzie, by RBC, by Goldman Sachs, they're all indicating about a 5 million ton deficit by the end of the decade. That is incredibly significant. That is similar to having 20 massive mines being built. And so I think the price movement we have is in anticipation of that deficit. As we know, as prices increase, the deficit should decrease as it's going to incentivize more production, and people will think twice before using the copper. So the fact that we have the $4 copper price so early in the cycle is very supportive of the fact that this is a long-term trend that we see, lasting, potentially to the end of the decade.
Yeah, easily. And we talked about it before. There just aren't a lot of substitutes for copper in electronics and electrification. Aluminum, maybe to a lesser degree, but there's really nothing else out there.
Yeah, that's correct. So aluminum, for instance, is also a conductor, and it's got a similar face-centered cubic structure as copper has. I don't want to get too technical, but it does have some properties which don't make it suitable for all of your wiring needs. And in fact, countries have tried to use aluminum to replace copper. It's resulted in some fires, and it's actually been banned for in the electrical codes in a lot of countries. So aluminum is not the answer. The one material which is a better conductor than copper is silver. But of course, for massive implementation, we can't be using something that's worth let's call it almost $1 a gram. So really, copper it is. And with the increased electrification of transportation and the changes we see to the power networks throughout the developed world, where people are going to more sustainable power development, all of that is much more copper intensive than the previous industrial model that we had that started in the 20th century.
Yeah, so true. And we're going to have problems. There's limited, there's only so much scrap copper around. and maybe we'll get more efficient in recycling it, but that's not going to fill the gap, is it?
No, correct. Scrap copper has always been, say, between 15 and 25% of the copper supply. And in times of high prices, the scrap comes out of the woodwork and kind of fills the gap. But this time, in fact, we don't see a large increase in the scrap supply. So that's another strong indication that this supply-demand deficit that we're seeing needs to come from new mines.
Yeah, and those new mines take forever to come on stream, which is you're particularly well suited because you're basically reopening and expanding mines that have been on limited care and maintenance for quite a while.
That's correct. And the other thing is that our mines are already built. So once we get underground, we just need to develop a few new levels and we can start mining in some of the cases related to our mines. So that's an advantage that the company has, is that we're a development exploration company, yes. However, we're very close to production. What we're trying to do is put together a hub and spoke model where we have a number of mines feeding a centralized mill in order so that we take advantage of economies of scale with the large mill that we have of 2,700 tons a day. But one of the things which gets triggered now is with such a high price of copper, the amount of mines and the amount of tons per day we need to be economic is less than it was before. So that's something that we have to evaluate.
Yeah, so the hub and spoke model, which airlines have been using for a long time, somewhat to our benefit, somewhat to our detriment. Do you see a weakness there in hub and spoke, or is it all upside?
I think it's all upside because it gives us a couple of things. One of the things it gives us is optionality, where we can choose what's the best sequencing for the mines. Second, it gives us flexibility. We're not reliant only on one deposit. And so those are some great advantages of hub and spoke. And the third thing that it does is it allows us to have economies of scale. So the cost of each mining center actually goes down when you're running a number of mining centers because there's shared services and you don't need a general manager for each of the individual smaller mines.
Yeah, that's kind of an ingenious strategy that really makes the most of your mill. And the mill you've got right now, what's its capacity?
The capacity of the mill is 2,700 tons a day. And the mill has run at that capacity in the past. And again, a number of mines were feeding the mill at that time.
All right. And there is the potential for expanding that mill when that day arrives, isn't there?
Yes. With process plants, the metallurgists and engineers can always expand. And as we know in underground mining, the bottleneck is usually the capacity of your mining. So if we're able to find sufficient deposits to overfill the mill, well, then that's a really good problem to have.
Okay. One thing I wanted to ask you, and it's as much for curiosity as myself as any of you watching. So when you take a mine, regardless, in this case, copper, obviously, that's more or less been abandoned, limited care and maintenance, like we see on Joe Man, you got to dewater it. What are the particular challenges involved in the reactivation process?
Well, the first challenge is the dewatering. You have to make sure that the water gets treated and then, gets treated and then gets deposited in a nearby body of water. In our case, we're very fortunate that the quality of the water at the Joe Man mine was exceptionally good. The pH was about 7.2, which is essentially a natural pH of water. And the levels of dissolved metals were very low. So we're not going to have an issue with treatment of the water. The second thing you have to look at is the ground conditions, the geotechnical conditions within the mine. Again, we're very fortunate. The mines we have are in the Canadian Shield. This is not a seismically active area. The rock itself is very competent, so we should be able to come in, do some rehabilitation of certain areas, get the ventilation up and running again, get the hoist up and running again. But it's really much simpler, I would say, to recondition a mine recently closed than it is, say, to build a new mine when you're talking hundreds of millions of dollars of investment versus tens of millions.
Yeah, and then of course the time frame involved in developing a new mine, the risk that time frame creates because it is so capital intensive. So here, effectively, you're able to bring these mines back for a fraction of the cost of building new mines, and that's going to go right to the bottom line.
Correct, and that's another one of our advantages. So we're in the process of continuing to drill the properties, and then we'll do an updated resource statement, and then we'll do a PEA, which is a preliminary economic assessment. And then the PEA will in fact indicate, we'll give a capital cost estimate of what it would take to get the camp up and running again. And that should show that our capital intensity would be less than a comparable underground greenfield mine.
I can't even imagine. And they're so hard to get through. It takes, it could take a decade to get it through. And here you're almost ready to go. So what challenges do you foresee now in the coming year? You mentioned the updated PEA and resource estimates being revised upward, I assume?
Yes, that's correct. We anticipate the Corner Bay resource will grow in size. Currently, it's 3 million tons at about 3.5% copper. We'll come up with a maiden resource, 43101 on the Joman property, and that should be coming out. We'll update the Cedar Bay resource as well. And those should all lead towards the execution of the PA, showing a hub and spoke with those mines. Plus, we have the Devlin property, which we haven't been drilling, but it does have 760,000 tons at 2.4% copper, close to surface, and there's already access to the ore.
Well, that's a real plus. So again, you get to develop this mine on the cheap. So as far as moving ahead goes, we can expect pretty important announcements in the not too distant future on the road for you to becoming a producer again.
That's correct. And other announcement that we made earlier this week was we announced the acquisition of the past producing Norbo gold mine. This is a mine which is only 15 kilometers by road from our mill. It produced 160,000 ounces at a grade of 13.77 grams per ton gold. There's a couple of structures adjacent to the mine that are very interesting. They've only been drilled down to 150 meters depth. Channel samples have been taken that have given a decent grade. So maybe that one comes into the mix as a gold part of our portfolio. So that's one of the strengths of the company. We do have high-grade copper and we have high-grade gold. We think those are two excellent commodities for the company going forward.
All right, and your cash position in February and in January, you had a couple of raises, private placements. How's the till sitting these days?
Yeah, the till's good. We closed the month. Of January with February with $16 million in our accounts, and probably burning about $1 million a month while we're drilling. So leaves the company in a very good cash position. We're looking to drill kind of to midsummer, late summer, and at which point we'll just focus on the studies that are required. Once we finish the study, we'll recommence the drilling again, more focused on the recommendations from the PEA. There's always exploration potential in our camp. We have 10,700 hectares of land. We have a number of deposits, and we're always coming up with new ideas of areas to drill. So we'll kind of start afresh with the drilling, say, towards the beginning of next year. And the PEA will also lead us towards the steps that are required to get to a more detailed study. And that second detailed study will essentially be the study from which we can finance the restart of the mining camp.
All right, that's got to be really exciting. Working towards this for years, and it's finally going to become a reality. Hey, one of the best things that I think about Doré, and I'm a shareholder as well, is your share structure. Latest what you got posted, 36 million 36.2 million shares. Really, that's not much for a Canadian resource company.
Correct. That's not it. And then what we did is with the raises that we recently did, that number has gone up to 53.2 million shares. The retail component's about 40% of the company. We trade about 150 to 200,000 shares a day. So our liquidity is up, and we trade on the TSXV and also on the OTC. And we're recently listed in Frankfurt. So I've been doing some marketing over in Europe, all virtual, of course. But we're really getting the name. We're getting the story out there. People are very, very interested in copper stories, wanting to kind of catch this copper trend over the next decade as we realize it's really the most essential base metal.
Yeah, and you're perfectly poised to do it, basically at a substantial discount to what others have to go through to produce similar amounts of the metal. And with low dilution, as a shareholder, that number always makes me happy. Obviously, as things progress, you're going to have to raise more capital, but hopefully on favorable terms. And the dilution, from what I see with insiders controlling 22%, it's in your personal interest to keep the dilution at only the most necessary level.
That's correct. And there's many ways, once we're at the point of wanting to build the mines, we have many non-dilutive ways of advancing. Because of the gold component, we have the potential for a stream, and debt is available as well, given the nature of the deposits we have and where we are located in the world.
All right. Well, it's all pretty exciting. Again, the website is dorecopper.com. The tickers on the OTC is DRCMF, and on the TSX Venture, DCMC. Hey, we'll check in with you again shortly. It sounds like we'll have to do that a little more often. Sounds like things are really happening, Ernie, and we'll talk with you real soon. If you have any questions for Ernie, just send me an email, kl@kerrylutz.com. Ernie, been a pleasure.
Thank you very much, Kerry, and all the best to you and your listeners.
The Financial Survival Network.